Hello traders and welcome to another weekly market forecast video. So hopefully everybody is having a great weekend. So let's get started straight into the point with the dollar index. As we expected, we got the move to the downside and now we are expecting a small bounce for another move to the downside thereafter once again. So this bigger drop in the dollar index, we have been expecting it from the beginning of the year. And we expected at least the 104, 105 area. So we got even below, but more downside should be happening after a small possible bounce right here. Into the coming weeks, the dollar should have another move to the downside, and this is still going to be our bias for the dollar. Now, before we go to the dollar yen, we would like also to inform you, if you are new here, that we do have also regular postings on our Telegram channel. The link is in the description. Make sure you are subscribed there because you can get educational posts every now and then, and also a lot of before and after successful forecasts that we provide for our member service. So if you are new here and you are wondering what is the value of our service, you can follow our befores and afters on Telegram because they are a lot, and we will not have the time to create videos on everything. It will take us a lot of hours to showcase everything from the last year. Anyway, dollar yen to the downside, we expected this drop. This bounce, we explained that it was going to be bounce and lower. We have got another move lower. We reached the 147 area. So from here, the dollar yen can bounce again, and this is our expectation, and then it can turn lower one more time. However, this one at this stage is this drop is getting mature, so we are not interested for any big moves to the downside from now. But it can remain sideways to lower. This is our main bias. There are better pairs or markets you can trade, but not this one at this point. Now for the euro, if you go back a few videos and you see what we have explained after these levels for the euro, we explained that a turn is happening, a fight between the buyers and sellers for a push to the upside for at least the 108 area. This is exactly where the market has reached already. So this was the move from the 102.50 to 108. It's about 550 pips move, which we expected. Way ahead of time, of course, like we usually do. And we can see a possible small pullback is going to happen, and then another move to the upside. It's also possible we can see the euro even going to the 110 area within this cycle from the 13th of January. So this will be our outlook for the pair. Pound dollar, also this one we expected the same thing, a move to the 128, 129 area. This is exactly where we have reached once again. From these 122, 121.50 levels to 129, that's another 700-800 pips move. So for the pound, also small consolidation for another move to the upside is possible. So we can also see the 131-ish area in the pound within this cycle from the 13th of January. So in all the cases, this cycle is still intact, and we can see a small pullback, or if it's not a small pullback, sideways consolidation for another move to the upside within the 13th of January move to the upside. Now for gold, of course, we explained after this pullback that the market should have provided with another buying opportunity. This is exactly what happened on the 28th of February. The market pushed to the upside again. So this was another buy the dips opportunity for gold, as we explained, like the one from 27th of January, like the ones from the 19th and the 30th of December. So right here we are consolidating, and soon gold should turn up for another acceleration to the upside, for another new all-time highs. So of course, for more detailed analysis and where we see gold, you should become a member. The link is in the description. So you will learn how, when, and why to enter the market and when to avoid trading, because this is the key if you want to become successful in this business. So gold new all-time highs are coming soon. Another buy the dips opportunity occurred last week. So for our members, they knew it ahead of time that we expected the double from here, and the market provided another entry for the buyers. At the moment, if you didn't buy from here, or from here, you are doing something wrong, and you should not chase the market higher. You need to learn how to get in the market at the right times with the best risk to reward ratios and probabilities in your favor. Now for oil, we have seen this move to the downside and this sideways rotation for another move to the downside, exactly on the dot and on point. You can go back and watch our previous videos, of course, they are all there. So we have reached a pivotal moment in the month of March for oil. We have kind of broken the lows from the 10th of September. However, at the moment, this drop to the downside is getting mature, and we can also see the possibilities of a sideways market before the next move to the downside. So at this point onwards, the sellers should had enough, and this is a time to take profits from the $80 area and see what the market wants to do for the next 1-2 weeks at least. We would like to see what will be happening here and give us a hint into what to expect. Because this month oil needs to break the previous low from May 2023 at the 63.74 area. Otherwise, it can remain sideways and look for another possible sideways to higher move. So this is why we would like to stay in the sidelines for oil for the next 1-2 weeks and see what it wants to do. Now for gas, we expected after this drop to see a sideways to higher consolidation. However, the market has made this push to the upside during the middle of February, and that has changed the overall shorter term structures. And then we got this pullback that we expected, and the market pushed up again. So this is telling you that we are looking for upside, and the most likely scenario is going to be a move overall to the $5 area. This is what we can see before another possible retracement. However, at this point, the market is at the no man's land, which means that you should not be chasing it higher. The entry was here for the aggressive buyers, but the best trading opportunities were in the beginning of December for this move, which was the most clear move that existed for short-term traders. But in any case, we are heading for the $5 area target that we expected from the last year, when the market was accumulating lower within the $1.6 area for investors. For short-term traders, there is no value in the market right now. It's risky, and the higher probability is still to the upside. So if you have managed to buy from this area lower, you should be risk-free, and you are targeting the $5.2 area. Now for the SPX, S&P 500 cash index, if you go back in time 2 weeks ago, we have clearly explained for traders to be patient. The market was somewhere here. We explained that we could have done something like this and turn higher, or get a deeper pullback before we turn higher. This is why we said it very clearly. You should be patient with the S&P for the next 1-2 weeks time, and we got the double correction lower, which is fine. And this is now the time that buyers should be able to start accumulating for the next cycle to the upside for the S&P 500. So this is what we can see, that we are approaching a pivotal moment for the index. So this is the area that buyers should be entering the market for the next move to the upside for the S&P 500, which also should see again new all-time highs heading into the next month onwards. Another cycle to the upside should be expected, but once again, If you want to get these regular updates in details, we are actually doing at least 2 live sessions a week. We are also doing a lot of webinars. We give you clear analysis in our membership service, and we also tell you what to be avoiding doing and what you should be looking to do in all the instruments. And we also tell you which class of instruments is better to trade and which times, because our analysis and our approach is unique and we are capable enough to tell you what to avoid and when. This is how professional we do things, and we can see things ahead of time as usual. So S&P 500, a great opportunity after this double correction lower for the buyers that are interested to set up a position for another cycle to the upside overall. And lastly, for Bitcoin, we have explained that we should be accumulating from these lows from 28th of February, which was another opportunity for the people or buyers that didn't buy in the summer. The market provided another chance to buy again. So we are expecting the next 1-2 weeks probably sideways, so up and down for Bitcoin, but soon enough the market should start another cycle to the upside for another new all-time highs, and that is our bias for Bitcoin, and that hasn't changed. So if you want to know the bigger picture, targets, areas overall, and what we're seeing in any of the markets, not only Bitcoin, once again, you are missing out big time, because our members have been with us, especially from last year. They have seen the market inside out. They have seen exactly the path that we expected and how the market evolved over time and what we see further. Exclusive analysis, webinars, trade recommendations. You can also see our previous year's performance, and many other things, some things that you have never seen before, because we do things differently. There is a reason why we are here and why our members stick with us, because they know that we have the right tools, and we have a lot of tools that we are using to analyze and forecast financial markets, and this gives our members the edge over anybody else, whether you are an investor or whether you are a trader or a combination of both. You have something to gain with our membership service. So that's it for this weekend's video. Hopefully you have got value out of it. Enjoy the rest of your Sunday, and we'll see you in the next video. Take care.